Well, we got it. We got it. The Parliament gave its agreement in July, as I promised to you. In September, we got the signature and everything. So the bill, in fact, the regulation of the European Union was approved on 27 September. The following day, because we do overlap, you know, we try to catch on time. The following day, we had the first strategic meeting, which approved the big strategic direction of the plan. And we must get that from the people that put the money in the fund. And after the 28th of September, we had the operational board on the 7th of November, where they approved the 5 investment windows. So we are now set, and next week we will launch the call to the financial institutions to receive the proposal for the financial products that will be the essence of the plan.
So when do you think the first guaranteed investment deal will be signed?
We will ask next week, give them a couple of times to submit the proposal, give us 1-2 months to look at the project, so total of 4 months. I would say around April, May, we will have the first guarantee signed and operational.
And when will Africa see this in bricks and mortar?
Well, immediately after. I suspect, in fact, I know that many of the financial institutions, they do have a pipeline of investments that would like to cover with our guarantee. Therefore, the sooner we sign the guarantee with them, let's say in May, the following day they will have already 4, 5, 6 real investments, brick and mortar, as you call it, that will benefit from it.
What kind of sectors will they be in, you think?
The 5 windows are renewable energy and climate change, micro, small and medium enterprises, which creates a lot of jobs, especially in fragile areas. Agriculture is #1 priority in this business forum. I would define this is the business forum of agriculture and agribusiness. And 4 sustainable cities. This is a very innovative window. You need investments in cities. Solid waste collections, eco-services, mobility, and then last but not least, digital. So these are the 5 areas where we will expect to come with proposals. I can make you a couple of examples, if you like.
Yeah, I mean, just give us an idea.
An idea is that we provide, let's say, a cushion, the basement of a building with, let's say, 50 million of a guarantee. Then comes a development banker and says, okay, on your guarantee of 50 million, I can put 200 million of my money. And then we even go to pension funds. The pension fund comes and says, okay, I put 1 billion of my money. But the risk that is bearing the pension fund is very low, lower than the risk of the bank, and extremely lower vis-à-vis the risk that we take. So our risk-bearing capacity will enable to leverage a lot of money. And then this is typically an equity fund. So they provide subordinated equity to a company, startup, agriculture, agribusiness, digital, energy, etc., for business to prosper.
So far, it does sound fairly clear-cut and simple, but what problems are you facing, you think, to see this final thing through?
We are paid to make complicated things simple, and we are paid also to solve problems. The plan, you know, is not made only with this component, which is the financial aspects. The plan is also made with other 2 pillars. You remember, the second pillar is technical assistance, feeding into the first pillar, that is the finance with project preparation. So grants for project preparation so that they become bankable. And on the other side, this technical assistance is also deployed in order to make policy for investments conducive. I'm not saying fighting corruption, because that's big, but certainly looking at red tape bureaucracy, simplification in the administration, increasing capacity in the administrations, making laws if necessary. So these are the 3 pillars, and the coordination of the 3 makes this plan so innovative and so interesting.
And the African governments you're talking to, what's their reaction so far?
Mixed reaction. Some of them, they say, you have not consulted, which is correct. We have, first of all, to get the go-ahead from the taxpayers, from the people putting the money. we haven't decided anything. So what I'm trying to explain to African friends is there is no decision. It is a shell, it is an instrument which is available for your decision. The direction of a government to go into agriculture or other sectors, nobody touches. But now there is an instrument that can allow investments that will never go in that country because of the risk to go in that country. So that's it. We are enabling with 4 billion euros, which will leverage 44 billion euros of investment, so that is not peanuts, but we don't take any decisions on where and what. This is up to the governments and of course to the investors, to the private investors. So we will not approve any investments if that investor does not have, let's say, the permit, the license of that given country, or at least is in the process of.
One last question. You're targeting a lot of technology and digital projects as well, which is the future, no doubt, in this continent. But often these operations, they don't create the massive amount of jobs that factories and
agriculture.
Yeah, agriculture does.
You are right.
Yeah.
Technology is much more an enabler for other sectors. We see technology in agriculture to help farmers and farming to become more productive. We see IT in rural electrification as a way to charge people with mobile phones in order to get the electricity connections switch on and off. We see at IST pervasive in urban investments for the management of public services and so forth. So indeed, IST is a big cross-cutting sector. We frankly see a lot of jobs developing in agriculture and agro value chain. We have to get out from this trap of commodities. Products must be transformed, value must be organized and added on the spot, and then they can be sold. First of all, in the country, secondly, in the region, and thirdly, to Europe, to the Gulf, to China.
Robert Ridolfi, Director General of Sustainable Growth and Development at the European Commission.